Hey everybody, Tim Brahim, Performance Experts Coaching and Leadership 360 with another business and life tip for you. And today's business and life tip is in regards to the subject matter of private money lending. A subject matter that doesn't get often discussed among loan originators in the residential lending field. And when I say private money lending, I'm not talking about the notion of you going off and becoming a private money lender per se, because it is a bit of a different animal. But what I am saying is having access to that source of money can be incredibly valuable and useful in your origination practice, and you being able to bring unprecedented value to your referral partners and to your clients. Now, back in the day when I was an originator, I always had a source to this money, and in some cases the source was me. I actually made some private money loans from time to clients in an effort to get some deals closed, in an effort to forge relationships that I was looking to really create quite an impression with. Now, in today's market, with inventory being a bit tight, private money lending isn't quite as prevalent as it would be going forward. But let me share with you why I say that. First of all, there's going to come a point in time when the market starts to shift, and when we have a little bit more of a transition from a premium of sellers and less buyers, and you have these dynamics where a client has found a property that they want to buy. But they need to unlock the equity in the current home that they have that's on the market and they haven't yet sold to be able to close on this property, and they don't want to lose out on the opportunity. I'm sure you've had this circumstance happen in the past. Okay, and in many cases, because you can't get into the equity in their property because their home's listed for sale and no lender wants to make a loan on a listed property, okay, they have to pass. And they're in this quandary where they don't know what's the right timing on this. Do I make an offer before I have my home in contract, or do I wait? And their realtor's frustrated because they're having to pull back the reins in some cases. This is where private money can be incredibly effective in one example at least. So being able to make that bridge loan, being able to, say, tap into that equity, put a second trust deed on there for a combined loan to value of 80 or 85%, and to have that make a deal happen, and to cement a relationship that you are looking to cement with a real estate agent, who now maybe in some cases you might even be able to cement a relationship with two real estate agents, right? Like the listing agent on their property and that they're buying, and then the buyer's agent. Both are impressed by the fact that you were able to get a tough deal done that nobody else was able to get done. There's certainly many other ways that private money can be effective. I mean, I've had so many other circumstances where I've had clients come to me, and because of qualifying ratio issues or not being able to document their income, but they have a lot of equity, or maybe they've got some dings on their credit report, they need to get a loan. And if you can have access to this type of money, you can sometimes help clients that you would have normally had to pass on in the past. And these can be very profitable loans. So I really suggest that you start to take a look at how you can align yourself with some private money lenders. The underwriting guidelines are usually pretty simple. It's very much equity-based lending. There's not a whole lot of guesswork to it. The underwriting criteria is just a certain loan to value or lower, and if the property checks out and is in good condition, a lot of the times you can make these deals happen very quickly, and you can add your points into the process and serve your clients more importantly than anything. So start taking a look at that. We have more business and life tips coming your way. Hope you're having a great week.